Hello, welcome to AleaSoft webinar. My name is Alejandro Delgado, Associate Partner of AleaSoft, and thank you for joining us today to the webinar with the topic Prospects for European Energy Markets in the Second Half of 2025, Renewable Energy, PPA and Batteries. Our first speaker today will be Oriol Saltó, Associate Partner of AleaSoft, that will discuss about the evolution of the European energy markets and prospects for the second half of the year. Then, we have two guest speakers from Engie Spain that have joined us again after 1 year from our last webinar together, and that we talk about the growth opportunities in the renewable sector, the current affairs of the PPA market in Spain, the prospects for energy storage in batteries, and IDAE's call for aid for energy storage. They are Daniel Fernandez, Strategy, Regulatory Affairs and Communications Director, and Ignacio Sáenz, Head of Origination and Sales. If you have any questions at any time during the webinar, please use the Q&A menu and we will answer them after the presentations. And now, I hope you enjoyed the webinar. Oriol, please, you can start now.
Thank you, Alejandro. Good morning, everybody. Happy to be here once again with Engie. It's been, I don't know, 5 or 6 times already with Engie sharing their knowledge about the opportunities in the energy market, the PPAs, also very great information. So, well, as Alejandro mentioned, I will do the first part talking about looking at the energy markets in the recent weeks. You will see that everything, it's been quite quiet during compared to previous webinars when we had ups and downs. It's been relatively quiet in the recent weeks. First of all, I will start explaining a few words about our company and our services in case you don't know us. In AleaSoft, we are energy markets advisors, more than 25 years of experience. We cover all the energy markets in Europe, also some markets in the Middle East, some markets in North America, in South America. And we have data and we monitor basically any energy market at the global level. The methodology that we use to modelize and forecast the energy markets, it's our own methodology developed by ourselves, specifically for forecasting in the energy sector. And the 3 main points that we always like to stress about this methodology is that it is a completely scientifically based methodology. It's a hybrid model that combines techniques more from the classical statistics like regression, econometrics, time series analysis, combined with more advanced techniques of artificial intelligence, machine learning algorithms, recurrent neural networks. So with this hybrid model, we are able to provide very consistent, coherent, stable forecast. The consistency and the coherency of our forecast over time is one of the aspects that our clients appreciate the most. And well, this is the methodology that we have been using for 26 years now in the company. And basically, we started in the Iberian electricity markets, now covering all the energy markets at the global level. We provide a very wide range of services for the energy sector. So we cover the needs of basically any actor, any player in the energy sector. At some point or another, everyone will need some of the services that we provide. Under Alea Green, we have all the long-term forecasting. That means forecasting up to 30 years ahead of hourly prices, demand, production of renewable energies, CO2 prices, gas prices, etc. Everything at the long term, useful for long-term planning, long-term investments, PPAs, references, etc. Under Alea Blue, we have all the forecasting at the short term, so day ahead, some days ahead, up to 1-2 weeks ahead. Basically useful to operate and participate in the spot energy markets. Under Alea Storage, we provide revenue forecasting for energy storage facilities, standalone batteries, or energy storage in hybridization with renewable energy plants, pumping stations, anything related with energy storage at the short and the mid and also at the long term. We have a couple of marketplaces for PPAs and for renewable energy projects. If you need to buy or sell some of your projects, we provide information. We publish regularly every week reviews of the energy markets in our website. We make this webinar monthly series analyzing all the hot topics on the energy sector, and we provide consulting with any needs that you need for any aspect of the energy markets or in any of the energy markets at the global level. So let's start the review. We always start with the oil prices. Since our last webinar, it was in mid-May, prices basically stayed around this $65 per barrel, as we expected. If nothing extra, even some risks were involved. Basically, most analysts see the prices for the following weeks and months staying within this 65, maybe up to $70 per barrel. So even OPEC Plus is increasing the production, so more oil is in the market. Everything stays relatively stable. Yesterday, prices reached up to $70. Right now, they are back to below 69 already. So coming back to this range, and basically, as I said, for the coming weeks, for the coming month, for the rest of the year, second half of the year, prices are expected to be within this range. Obviously, there's an upside risk, mainly coming from disruptions on one side, disruptions on the supply, depending on the geopolitical tensions, sanctions on the Iranian exports. Yesterday, we had news about the Strait of Hormuz. So there's several key points in the geopolitical situation that make push prices slightly higher, but if everything remains more or less as expected, prices are expected to be kept within this range. Below 60, that it's the lower price that we have in the recent month, it's difficult that we see, because once we enter below $60, then profitability for mainly the wells, the oil wells in the United States start losing money, let's say. So the supply could start be reducing if we went below $60 per barrel. So this is right now is seen as a very strong support, very strong floor for oil prices. Now, about the gas, these are the gas storage levels in the European Union. Right now, we are in a good rate of gas injection, filling the storage during the summer in order to reach an optimal level before entering the winter. Storage are already above 50%, quite lower than they were last year, also lower than the 5-year average. But if everything keeps at the same rate, we are going to be at the rate of 80-85% before starting the winter. This is the proposed level for the European Commission. The previous level was 90%. So if the market conditions remain in the same conditions, it looks like it's very feasible to get to those storage level. If we get that target, then we expect the winter to be more or less. We don't expect price spikes during the winter. But if the market conditions tighten, then things can change because the rate will decrease. So why we are having this stable increase in the storage levels? Basically because right now the market is not the LNG market, that is where the main source after we now have more piped gas from Russia. We are relying on piped gas from Norway, some from Turkey, and mainly the main source of price fluctuation is the gas that comes from LNG. So basically, right now, LNG demand, our great competitors on LNG are Asia. The gas demand increase in China mainly, it's not increasing as expected. So this is loosening the market, the LNG market. So prices, as you have seen since our last webinar, have been pretty stable. So it depends on how the gas demand from Asia mainly evolved during the summer. Prices can increase during the summer and put some tensions in the refilling of the gas storage. But right now we see the things more or less being in this range. It looks like there is more upside risk. So if really the condition changes, prices are more likely to increase. Probably not to the 60 euros per megawatt hour, but probably prices around 40 euros megawatt hour is something reasonable to get during the summer. We will see. Right now, everything looks quite quiet. CO2 market. Well, again, not changes. Prices have increased slightly since our last webinar, around 5%. Probably the increase in industrial production. Investment funds are again investing in this market after they basically changed their sold their long positions when prices start decreasing. Right now they are buying again, so they are again net long on this market. So we have some pressure from the investment funds. So at the long term, we know the trend of this market is clearly upwards. Right now, there is clearly an upside risk. So depending on how gas prices during the summer go, depending on how energy prices, that can put pressure also on CO2 prices. Okay, now let's see the electricity markets. As always, I take this opportunity to show us our online database for energy markets. This is one of the services that we provide to our clients. And here we basically have all the information, all the variables needed for the energy sector. So basically anyone working in the energy sector need information. Information is power, they say, and I would say it is even more important in the energy sector. So being you an analyst, a trader, an investor, a journalist, a CEO, everybody needs information, and you have all the needed information in one place, in one format, always updated and ready to be analyzed. So what we are seeing here is the monthly average prices for some of the most important electricity markets in Europe. The here it is, and as you can see, prices have been decreasing in the last month. So compared to the last month that we saw in our last webinar, that was April. Sorry. So prices have been decreasing. The market that decreased the most, it's been France, 64% down, then Spain, 37%, and then the rest of the markets more or less around 10%, between 13 and 6 or 7%. So and Italy is still the market with the highest prices. Italy has a lot of renewables, but they also have a lot of gas, so relying a lot of gas. So they are basically exposed to the gas price markets. So it is usually, and it keeps being, the market with the largest prices. And then again, the Iberian market is still the lowest one, but France is getting very close. So they are basically both more or less at the same level. If we make a zoom, those are the daily average prices since the beginning of April. And basically we can see how As I said, Italy is the one with the highest prices. Most of the days, the prices are above 100 euros megawatt hour. And then at the very bottom, we have Spain here in blue, and France, that as you can see in red, prices are getting lower and lower by France. And basically, since the beginning of June, France is the market with the lowest prices. Prices for the Iberian market are now going back to the level of 60, 70, 80 dollars, euros per megawatt hour. If we make a zoom in the hourly prices, those are the hourly prices since the beginning of May, you can basically see how we had some very, very low prices episode on this was May 11th. It was basically Belgium, the one that got prices lower than 450 euros megawatt hour negative. But basically, most of the markets got prices or zero or very close to zero. If we take a look at the last few days, this is since the beginning of June, you can see how we are having basically zero or very low prices during solar hours in most of the markets. It's not the case of Italy, for instance, but for the rest of the markets, it's the case. And France is having very low prices also in non-solar hours. So this is why the daily average it's being the lowest one right now during June. So while the rest of the markets for non-solar hours have basically prices around 100 euros megawatt hour. And if we take a look at the situation of the Spanish market, because we know we have been in this spring condition of the prices with very, very low prices during solar hours. Here we can see the hourly prices and the 24-hour moving average since the beginning of March. So more or less in mid-March, we started having these very low prices, zero prices most of the day, negative prices during solar hours, during April, during May, and now in June, prices are starting to recover. We still have very low prices during solar hours, but we start having some days when solar or prices during solar hours are even above 50 euros megawatt hour. So we are transitioning from this spring weather price conditions to the summer price conditions. So during the summer, with more demand, with usually or probably slightly higher gas prices, electricity market prices are going to be higher. We will still have lower prices during the solar hours, but they are not going to be as close to zero as they have been during this spring, during this recent months. So basically, we are starting to see this transition to more summer-like price condition. But more than the hourly prices, what it's usually worrying for the industry are the capture prices. So, well, let's start. Let's first keep counting the number of hours with zero or negative prices. These are until June 12th. So for each year, how many hours with zero or negative prices we have had until June 12th. So for each year until June 12th. So basically, we can see as in the Iberian market, we are right now at basically at the same. I think the difference is just 1 hour. So we are basically in the same number of zero and negative prices hours that we had last year for the same period last year. For the rest of the countries, Germany and France, they already have more negative, have had more negative hours this year than last year at this time. UK is slightly lower and Italy is increasing. But basically, Italy is having very few hours. So the number of hours with zero negative prices is important because most of the PPAs have treat in a special way these hours with zero or negative prices. So one of the forecasting services that we provide is basically forecasting the number of negative hours or zero hours at the long term, because it's something that it's where PPAs basically are very sensitive to it. But more than the number of negative hours, as I was saying, are the captured prices. So how are the captured prices for solar PV in this case? For Spain, and you can see the capture prices for 2023, 2024, and 2025 in June up to 2 days ago. Basically comparing 2024, so last year, with this year, we are better at this point, basically because we had higher prices during the winter. And during the spring, more or less the situation is the same, but kind of shifted, because this is due to weather conditions. So spring-like temperatures arrived later this year, so this is why everything is a slightly shift. But again, last year in June, captured prices already recovered. This year they are already recovering, so if the pattern that we usually see in captured prices is kept this year, basically now we are entering a better situation. So it looks like, if everything goes as expected, the situation for the PV plants is going to improve for the second half of the year. Year to date, right now, capture prices for solar PV in Spain above 30 euros megawatt hour. Last year, until this date, we were close to 21 euros megawatt hour. So we are slightly better, I would say, than last year this time. We will see how the second half of the year develops. For wind energy, the situation is even better. During the spring, we have had better prices than we had last year. We are already this month we are already at the level of 60 euros megawatt hour. Right now, June is having the highest capture rate in the history for Spain. So we will see how the rest of the month develop. I think it's above 100% the capture rate. So it's quite good this year. Let's see how the rest of the month developed, and if the pattern is kept, basically the second half of the year is going to be quite good also for the wind. Compared to last year, in the case of the wind energy, we are clearly better. So 56 euros megawatt hour right now, less than 30 euros megawatt hour last year until this day. Okay, now let's take a look at the futures market. So what are the market agents buying and selling energy now that it's going to be delivered into the future? Basically, as we have seen that the spot markets have been relatively quiet, relatively stable in prices, the forward curves are also have been quite stable. Basically, very small changes in the forward curve for the Brent oil, slight changes at the very beginning, some changes at the very end in the tail of the curve, but basically pretty stable, following spot prices that have barely changed in the recent weeks. The forward curve for the TTF gas, we have seen some interesting changes, given that the spot prices haven't changed so much. The expectations for the summer have changed quite a lot. So as we were saying, LNG demand from Asia, it's really very low compared to where we expected it to be right now. So futures for the rest of the summer of this year, -6%, down by 6%. So quite a lot. Close to 5% for the next winter, 3% down for the next summer, and similar for the winter of 2026. But basically no changes in the rest of the curve. So basically reflecting what we are seeing right now, that it's a relatively quiet summer for gas prices. If this is the case, then the refilling of the gas reserve, the gas stocks, it's going to be relatively quiet, and we will be able to face the next winter without risking the gas supply. This is expected to be fulfilled, and also less tensions in the energy market also that will help energy prices in general. CO2 forward curve, basically no change, as the spot prices basically haven't changed in recent weeks. And the forward curve for the electricity markets, basically following the stability in the rest of the futures market, basically no changes. Some changes at the short term for Cal 26, basically following how the decrease in the gas futures that we have seen at the beginning of the forward curve, but basically no changes at the long term. Okay, just as a way of summarizing, also what are the key elements that we are taking now into account when forecasting. Brent oil prices quite stable around this $65 per barrel. I would say $65-70, because yesterday we reached that level. But basically we are expected, depending on how all the supply situation from Iran, the Strait of Hormuz, geopolitical situation, depending on how that develops, we expect prices to be more or less within that range. TTF gas prices, given the low level storage levels that we have compared to previous years, prices are quite stable. That's basically due to the weak demand of LNG gas from Asia. So if everything keeps as it is right now, we will be able to refill the stocks at reasonable prices. But as always, there's the upside risk if the market tightens, if the Asian demand starts growing. Now that we have yesterday we had kind of a deal a trade deal between USA and China that could start increasing the expectations for the Chinese economy. We would expect then higher gas and oil demand from China that would put pressure on prices. So we will see. There is the upside risk. It's clear in this case. CO2 prices quite stable. The market right now seems strong at this level. At the short term, there's some upside risk. At the long term, we know that we are having an upward trend. Electricity market prices, as we have seen, it looks like we are at the end of this spring condition, moving to the summer price condition, where we will have higher prices and also higher capture prices, mainly for solar. That is the one that right now is having the lowest capture prices. And as always, this next year we are going to see how the energy storage is going to increase rapidly. We are seeing everything is aligned to see this revolution of the energy storage of batteries, because now we have seen the need for energy storage. Regulation is in place in Spain, as we will talk afterwards. We are expecting the capacity market. We are right now in a process of new aids, new subsidies for developing batteries. So everything is aligned in order to see this increase in energy storage capacity in the coming years. That is going to play a very important role in electricity markets and in electricity prices. And at the long term, as always, energy prices will be basically influenced by the increase in renewable energy, increase in demand, green production, energy storage, and how all these technologies hybridize and how they will shape the market prices. And let me finish inviting you to our next webinar. It's going to be July the 10th. And we will be talking, as always, we will take a look at the energy markets in the previous weeks. And we will be talking about PPAs, how large consumers of energy are seeing the situation of the PPA market. We'll talk about energy storage and also these aids that we are seeing in Spain for energy storage development. Thank you. Alejandro, back to you.
Thank you very much, Uriol. Really interesting as usual with this important situation we are having. And thank you, Daniel, for joining us again. I believe this is the 7th time you have joined us in our webinar. So thank you again. And when you're ready, you can share your slides and start your presentation.
Thank you, Alejandro. Good morning all. Many thanks to AleaSoft for counting on us and inviting Engie to give views and to share thoughts on the regulatory scenario and the market scenario panorama according to our perspective and business development planning in Spain for the upcoming years. Maybe I don't know if seven times maybe it's too much, but I also think that well we always have some ideas to share, or at least information to contrast with key experts, and also many thanks to all of you connected in this webinar. So let me share my desktop. Okay, there we are, and also there we are. Yeah. Fine. So first, big apologies. Maybe our director for origination and PPAs, Ignacio, maybe he's not able to connect due to a last hour urgency, but I will handle his part, no problem. So what we have prepared to you is just a 5 minutes update on what is Engie doing in the Spanish market, and also, well, where do we have a match with AleaSoft, and okay, what's our position today in the Spanish market and what we intend to achieve in 2030. Then reflect on current regulatory challenges. We will share some messages or some perspective according to the Spanish National Integrated Energy and Climate Plan evolution. As you may be aware, the NICP in Spain is considered one of the most ambitious in Europe. It was updated in summer 2023 and formally adopted in September 2024. So today, after 9 months and then even more of validity of these national targets to 2030, we think it makes sense to review where do we stand and what is the potential gap between the targets and the scenario. And then to close, and also, well, some reflections on what we shared in this webinar 1 year ago and today, because we participated exactly by June 13th, 2024. So just to see whether the regulatory challenges are progressing or not, or whatever. And then, well, at some point, the regulatory risk and the evolution of the macro scenario, it is something that agents can hardly control. But for sure, what we can control as agents is the market volatility and the decision to hedge or not within this volatility. Therefore, we always think it makes sense to make some reflections on what's the status of the PPA market in Spain, why PPAs are useful, and what is the market appetite today, and what to consider whenever to enter in this kind of contracts. So let's go for it. Feel free to share any kind of question in the chat, and I can on the spot share quick answers. So okay, then, well, we see here our picture in Spain. Last year we had turnover around 6 billion euro. We are among the first top 20 companies in the country. On that matter, we are the 6th generator agent with a good balance between flexible low carbon generation, 2 giga of CCGTs. We have also 1.8 giga of renewables, 1.5 wind, a bit more than 200 solar, and a bit less than 100 mini hydro. And also we have distributed assets on self-consumption at industrial level, biomass boilers, and district heating and cooling assets in some cities, and some cogeneration sites. All that together makes a portfolio around 500 mega installed. So within all these assets, almost 4 giga fully on our side, and then around 0.4, 0.5 giga on third parties, cities and industries. This makes our portfolio of activities in the country. We are also traders, we are also retailers. We are very active in the energy management and dispatching, not only for our assets, but also for third parties. We are present in almost all the autonomies in Spain. We are more than 1,800 people working in the company, and we have a clear industrial heart in terms of making energy transition and decarbonization a reality. We have 4 main activities, as you may see here: renewable generation, CCGTs, assets for decarbonization in the very local environment, what we call local energy infrastructure, proximity solutions to decarbonize. And also we have a strong expertise in energy management, trading and supply. So those are our 4 global business units, our businesses. Whenever you go and whenever you find an Engie subsidiary, we are present in 31 countries. We have these activities, and in some countries we have also distribution networks for gas and for power. It is not the case in Spain, but basically this is it. We consider Spain is probably the most attractive market in Europe to make energy transition a reality. We are an industrial company, we are an utility that fosters decarbonization in the markets present for the industries, for the regions, for the cities, for the societies. So we consider that Spain is really a place to be in Europe due to talent, land, availability of resources. And also, Oriol mentioned in his presentation, there is clearly a potential in the long run if we see the expected power prices evolution in the long run. I will come back to this in a minute. So our target in Spain is to grow. Indeed, in 2017, we have almost no renewable assets. Today, we have more than 1,800 mega installed, and the target is to reach 4 giga by 2030, mixing up organic growth. We have more than 3 giga of pipe with almost 1 giga already to its conditions. We have also intentions to selectively make some M&A operations, and also we have a target on batteries and having around 300 mega running by the end of 2030. So clearly a story to grow. We are studying from our CCGTs some hybridization opportunities with solar, with batteries, and also we do consider that in this context of more flexibility needed, CCGTs have a say in the mid-run. Also waiting for capacity markets, as Oriol also has mentioned. And then for sure, we want also to grow in everything related to local assets helping decarbonization, mostly on district heating and cooling networks. We are incumbents on that activities in Spain, and we are already present with some networks in Barcelona, Zaragoza, Pamplona, Palencia, Avila, and we are targeting to Zamora, and the target is to keep on growing in several cities, notably with a strong focus on Madrid, but also in other areas related to that matter. For sure, growing presence in assets mean also growing operations in terms of markets, and this is why we have a stronger energy management and supply capabilities. So that's the picture. I will maybe give some more details later. Well, in terms of regulatory panorama, or in terms of how to review regulatory challenges, well, there is no doubt in the potential of Spain, as I have already mentioned. You saw in Oriol curve, and you see that in the maybe mid starting long run, Spain has a competitive advantage in terms of the baseload price compared with France or compared with Germany, maybe 20-30% below. And well, the NACP puts together very ambitious targets. I'm not going to enter in all the details, but basically renewables generation in the mix 81% by 2030, gaining thanks to this energy independency in the country, increasing presence of reducing CO2 emissions, etc. So the ambition, the counter ambition, and the NACP opportunity is clearly probably the biggest Spain has had in decades, maybe in centuries, in order to lead an industrial revolution in Europe. So it's good to have these targets. The point is, okay, these targets are really demanding and very, very ambitious in different matters. I'm going to focus in 5 items. And well, let's see to what extent this is happening or not. Well, first 2 challenges, as you see, the former NCP and the current one, the updated one, they foresee 62 giga of wind in 2030, 76 giga of solar, which is 56 of solar utility scale and 19 giga on self-consumption. Well, this is 2030 today, 5 years earlier. In wind, we are at 32.5, so still 30 giga to go. So roughly 6 giga per year to go. 5 giga, 4 or 5 giga to go. And then in solar, it is, well, if we are today at 34, the target is almost 59, 60. It is 6 giga per year to go. What you see here is data from Red Electrica. So the point is that are these rhythm feasible in order to accelerate, especially in wind and solar? And then is demand following? Because one can put together a very fair question, whether does this make sense? Increasing the generation mix a lot. We are today roughly 132 giga. If the demand is following or not, so this is why we put together here both challenges: expansion on generation and answer of the demand. Well, if we go to the historical evolution in wind, what we see is that this target of 4 or 5 giga a year, it's very, very challenging, or at least last year the number was around 1.2, 1.3 giga. And what you see is that the rhythm is not yet there. That's it, this is factual. If we go to the same analysis for solar, okay, the rhythm is 6-7 giga per year. We have in there in 2023, but last year slightly below. Self-consumption, we are today at around 8 to 9 giga. The target is 19, but as you see in these green boxes, the interest, it seems it is slowing down a bit due to a bunch of reasons. Probably, well, there are no new programs of support to CapEx investments. Markets are backwardated, therefore correcting, and maybe giving the opportunity for self-producing less appealing, etc. But it seems the rhythm is for this second half of the century, it seems it's going to be slightly below than the first one, so probably challenging to double in 5 years. So, but okay, we are maybe better for the target in solar, but for sure not in wind. And then the demand, as you may see here, the target of the NACP is to have in 2030 34% more demand than in 2019. And what you see more or less, without entering in many details, is that the demand is basically flat or growing 2023 to 2022, 2024 to 2023 by 1% per year. But for sure, accumulated growth needed, it's like 4 or 5% per year. And it seems that demand acceleration, this increase in electrification is not happening. There are tools that may foster that electrification related to better TPA structure, better fiscal design on the final euro megawatt hour electricity price, better access to networks in order to let demand connect and therefore consume electricity. But at least what we can say by analyzing this info is that, well, it seems the NICP is quite challenging, and particularly the fact of having the demand stagnated or growing at a slow pace, well, it opens a question. The point here is that we really need to accelerate, to simplify, to make decisions in order to accelerate in demand construction, accelerating demand connection, accelerating electrification, in order to benefit from that generation mix, which is growing. Indeed, this situation of overcapacity is perfectly reflected in the day-ahead market. These are the prices for today. At the end of the day, having hourly spot prices at zero clearly reflect this mismatch, but also it's a very optimistic signal if we are able to materialize the opportunity of develop storage or the opportunity to connect demand or to switch demand to these 7 hours of the day in order to extract value for this current situation. We see value in many, at least in 2 streams, right? One should be for storage able to benefit from this intraday arbitration, also for demand to come for these central hours of the day, etc. The challenge there, it is, well, so far we don't see a massive acceleration linking to what I have mentioned before. We have not seen many new developments in order to really accelerate for more demand connection or for more storage development within this market context, right? So maybe these are the most relevant reflections in NICP targets. Where do we stand today? There are other reflections that, well, at least it deserves a couple of minutes of comment. Well, on demand, this 34% again, or this final electrification, it seems there is something missing there. For the electric vehicle, the target is to have a penetration of 5.5 million of electric vehicles in Spain by 2030. If we put together pure electric vehicles and hybrid vehicles, we have today around 1 million in Spain, and the sales are around last year for pure electrical 57,000, as you see there. If we consider the same amount for hybridized plug-in vehicles, etc., you see that it seems there is also a mismatch there in terms of accelerating in electric vehicle. And again, probably the matter here is to put together incentives in order to fiscal incentives to go for that vehicles, and also accelerate in network connections for recharge facilities in order to be able to cope with that technology, right? So that's at least also a challenge related with electric vehicles. And then, well, in terms of the expected development of electrolyzers and the green hydrogen, etc., these sources are from Bloomberg. We can see the same on analysis from the International Energy Agency. Well, the issue is that the gray hydrogen today, the price is around 1.5 euro kilo. So therefore, if we are seeing green hydrogen doubling that figure, or even above between 4 and 5 euro kilo, it's hardly difficult for industries, for the most demanding consumers of that hydrogen to make that switch due to the potential loss of competition. And also, well, today maybe we have this target of 12 gig of electrolyzer. Maybe today at country level we are at 0.1 or 0.2. So the message here or the point here is that it's very good to have an excellent, ambitious NACP, but it seems it is extremely aspirational, highly aspirational, very good for the country in terms of, you see here, the NACP targets to mobilize 300,000 billion euro of investments within the decade, creating 500,000 new jobs on average. But the point is that, okay, we have an excellent final target, but there are many regulatory deployments pending to reach those ambitions. And we have seen some samples. Probably, for sure, if we want greenifying more the generation mix, some acceleration and some simplification in the permitting is needed, but probably first, it seems the challenge is much more on how to optimize better by increasing the electrification of the demand, by increasing penetration of storage capacity markets, by increasing demand with better and more accelerated connection to networks, and also, when needed, support that decarbonization at transportation level, maybe that switch for the electric vehicle, at industrial level, that switch for electrification, or for other green molecules. But at least the point here or the issue here is that, okay, we have an excellent final target, and it is very good to have such a such targets. But the point is that we need concrete regulatory deployments in between to be able to progress towards those targets. Indeed, when seeing the generation mix, we can see that the development has been positive in terms of evolution of solar, self-consumption, solar, somehow wind, but then now clearly the challenges are in the demand, indeed. And this is the conclusion of this part. What you see here is what we conclude with the within regulatory challenges 1 year ago in our webinar in 2023. This column is just copy and paste. Acceleration, better planning for demand connection, for batteries connection, capacity markets, need for more flexibility, simplify fiscal or reduce fiscal challenges, legal challenges to accelerate. Okay, what you see more or less is that the conclusion today is pretty similar to, this is why this thinking loud faces. The conclusions today and the challenges today are pretty the same as what we shared together with you 1 year ago. And well, little progress has been made despite some good initiatives such as the 700 million euro to support batteries recently updated. To summarize, the key challenge today is electrification, is the demand. You see there the end of the story, the demand. We need really to accelerate in demand connection, in demand electrification, in helping the final consumers in the industries, in the transportation, to benefit for a more competitive electricity, electron, etc. But clearly, there are some quick wins there. For example, data centers that are coming today to Spain, they are saying that they need sometimes 3 years to get permits for the connection of that capacity, then 1 year of construction. Come on, the CapEx cannot wait for 3-4 years to connect, right? So, well, basically, that's it. Well, little by little, there are progress, and we are confident that these challenges, they will be overcome in the upcoming months and also in the coming months and also entering in 2026. To conclude, a quick reflection on the PPAs. Volatility, markets volatility, price risk, it is something that agents can manage. You see here volatility, annual volatility, intra-year volatility, this 2025, intra-month volatility in May. Okay, there are the agents, we can reflect on the regulatory risk, but difficult to manage, but we can manage for sure through hedges, we can manage this volatility. Engie, we are quite active in the PPAs market as of 2018, and well, you have there something we did last summer with Carrefour. Not only we are active not only with assets, but also with consumers, and therefore, well, we have here people and teams dedicated to this kind of hedges. Again, the point is that a PPA is a perfect hedge. It's not rocket science. It is about not to lose. It is a no regret hedge. If you are happy with the price of 30 or 50 or 40, the PPA, it is about forget this volatility, forget the market behavior for 10 years, for 12 years, for 15 years, in order to hedge. That's the key point. If our board of directors, our shareholders, if they are not happy with that hedge delivered by the PPA, that switch of market risk to credit risk or to counterparty risk that we see here, it is just better not to go for a PPA. Sometimes I always put this anecdote. We have had question that we closed some PPAs here ending 2019 for the decade 2020 to 2030. We closed some PPAs with some industrial clients at 43, 44. You can imagine that 1 year later, those clients were complaining massively, and then now they are extremely happy seeing what has happened before. But again, it is not about signing a PPA and then asking the month after, I am winning or I am losing. You are winning when you have a hedge, because you should be happy with the price to make your asset, your project a reality, or to make your stable consumption of electricity without hedging or managing this price risk. Obviously, a PPA is very demanding in terms of legal guarantees, credit guarantees, etc., due to the game of switching risks that you see here. But it is an excellent tool to forget on the market volatility. Very good sample here. You see calendar 26 in Spain, what has happened with that product. A PPA, a hedge, is an horizontal line that let us manage and forget this volatility. Reflections, this is baseload price. What you see here is that, well, the world today, it seems it is, the curve is less backwardated. This is from 1 year ago, the column on the right. This is today. Well, what we see today, maybe due to many uncertainties that has happened this year, the market or the curve is just a bit higher. That we can say that what we see in Engie today, even we see this mid price at 57, maybe what we see as off takers to make projects, renewable projects a reality, we consider a good baseload price around 50 euro megawatt hour. Therefore, a capture price for for a as produced asset, solar asset, maybe around 30, 31 euro megawatt hour. Therefore, the shape factor, we see it maybe around 60% as of today. Obviously, in a market which is backwardated, at the end of the day, the pressure is more on the developers to hedge. The consumers, they have more alternatives, either to go for a PPA or to remain with part of the energy close in a PPA, another part going to the spot market or to other maturities, etc. Obviously, just a reminder, there are many other elements affecting PPAs: credit on the counterparty, how to deal with regulatory risk, how to assess all that legal functioning. So again, we always put together this message. There are always many tools or many items to consider beyond the price risk. And well, for sure, in terms of whether the price is attractive or not, supporting in the models such as the one provided by ALEA. We are partners from ALEA as of 20 years already. Well, it's always very good to contrast whether those prices or those PPAs are appealing or not. That's all on our side. Alejandro, Oriol, thank you very much for the opportunity. We are on time. If there are any questions, happy to deal with them. And if not, we can close. We can leave it here. Thank you very much.
Thank you very much, Daniel, for that great presentation. A lot of interesting information that you shared there. Let me check my camera for a moment. So yeah, thank you again. And I also wanted to mention that this year marks the 20th anniversary of our collaboration with Engie, and our partnership began in 2006 with Electrabel. And we have been working together continuously ever since. So thank you again for that. And so yeah, we are really on time. Uriol, I don't know if you have any questions that you want to answer, or
I can answer one question about the evolution of the capture prices for solar. So we've talked about how we expect them to increase in the second half of the year, but what about the next years? So basically, during spring we have very low prices because we have a lot of solar energy and we don't have enough demand, and because basically the weather conditions are quite mild in the spring. They are not extreme, neither hot, neither cold, so they are mild, and that makes electricity demand decrease, and also because we don't have energy storage. So next year during spring, probably the situation is going to be more or less the same. Demand, if we keep the rate, it's going to increase maybe 1%, maybe 2%, but solar capacity is also going to increase. And by next year, maybe we will have some more energy storage capacity, but it's not going to be a lot. So probably spring next year, we are going to have a similar situation. Next year, then things probably are going to change depending on how demand is going to increase, how solar capacity is increasing, and how we start seeing more energy storage capacity. So then things kind of start to change. So probably for the next 2 years, situation is going to be more or less the same, but things are starting to change in a couple or maybe in 3 years. And at the long term, if by 2030, as Daniel was mentioning, we have as much demand as the PNIEC is expecting, or something closer to that than what we are right now, if we have more energy storage as we expect to have in 3, 4, 5 years, then situation is going to start to change. The market will reach a new equilibrium, and probably during the spring we will always have lower pricing than the rest of the year, but globally the situation is going to improve for solar and also for wind.
thank you, Uriol. So that ends the webinar today. And as Uriol mentioned, I invite you to register to our next webinar in July. And thank you again, Uriol and Daniel, for your presentations, and the audience for joining. Have a nice day.
Thank you.
Thank you. Bye.